So here we are logged into the Grandgate Gardens QuickBooks file, ready to put in the paperwork for June, week number 3. Now the first thing you're going to want to do is upload those bank feeds. I've shown them in previous videos, and I usually do it on the case study videos because I want to remind you to do it, but I did that without hitting record. And instead of undoing everything that I did, just like they've seen it enough, just know that I've already uploaded the Triangle MasterCard and the Canada Bank checking for week number 3 already. So I just realized that the Canada Bank savings bank feed wasn't in the folder, so I'm just sneaking that in, and we're gonna add that right now. So I'm gonna come over here, we're gonna drop down, upload from file, bring over the savings feed, continue, put that to Canada Bank savings, and that is now in. So the next thing we want to do is we want to look at the charges. Open up the charges. It's actually quite a lot here in week number 3. Let's start with this Amazon one. So here we go with Amazon, and we can see that it was purchased on Amazon Business for Grandgate Gardens. We can see that it's a book. Shameless plug, this is a book available on Amazon, that Canadian Entrepreneur's Guidebook, All You Need to Know and Do Before Starting a Business. And I wrote that book and I've put that on Amazon, so that's available for purchase. Anywho, so here we go. We're going to go ahead and put this in. The only issue is it doesn't tell us how it was paid. There's 2 different things to download from Amazon. One shows how it was paid and one shows what the invoice is from the supplier. It's just an Amazon thing. So in order to know, was this actually paid by the business credit card? It probably is. Before guessing, why don't we just look? And that is the benefit of having the bank feeds in, because we can just sort of look here to see if we can find the Amazon charge. And if there's a lot, you can just use that search to put in the amount you're looking for, and then it will pop right up. So let's go ahead and put this in. Now, some people might ask, why can't we put this in from the bank feed? And you can, but there's some limitations, and I'm going to show you why. So I do like to see the source documents. That's why I find that entering the source documents and then matching afterwards is the best way, like, to make the most efficient and accurate bookkeeping for me, my style of bookkeeping. Another thing too is the way that I'm doing this case study by entering the source documents and then matching really does mirror how I do it for a lot of my clients who use Dext or another, digital paperwork management software. Dext is really great is because what you can do with Dext is the client takes images or forwards emails or uploads documents to Dext, and then from Dext I also have access to, and I can sync those documents from Dext directly into QuickBooks. So we're not entering using the QuickBooks interface, we're entering into QuickBooks using the Dext interface. So that's another reason that this case study generally does it from that perspective, because those digital paperwork document softwares are pretty much becoming, I think, a bit of an industry standard at this point. We're digitizing a lot of things. But if we have the physical paperwork or have it up on our screen like this and we're not using Dext, then what is the benefit of using the big screen way versus using the shortcut way once I've isolated or found that item on the bank feed? Well, the benefit of using the bank feed to enter it is because you're not going to make a typo on the date and you're not going to make a typo on the payment method. So there is a benefit to doing that. And what we can see here is it's sort of lined it up. It's guest office expenses. So it's a book. If it was, let's say, a lot of books were purchased or a lot of employee training was done, I would generally create a GL account called Training and Education and put it towards there, but it's just $20. It's less than $20, and I haven't seen this happen a lot. So office expenses, I agree, that's what I would put this to. And we can see that it's got Amazon.ca as the vendor and that the tax, here's the thing, it just says the tax is 13%. It just says back out 13%, but it's a book. And because it's a book in Ontario, the HST isn't 13%, the HST is 5%. It's because before we harmonized our sales tax, there was no PST on books. That's just how it worked. So that's carried forward into the HST. Only 5% HST is being charged. But we can't, there's no 5% set up right now. And sometimes it's not, there's different reasons that the tax is different. So there's no way for me, even if I expand this out to say what the amount of the tax is, even if I chose split, I wouldn't be able to, it doesn't let me specify what the tax is. So I'm going to go ahead and post this. The post is over here. Let's make this expand it. That's annoying that I can't drag that over. But anyway, so I'm going to go ahead and post this. And then I'm going to go ahead, we can clear the search. Let's look at what we just entered the big screen way. Here's that Amazon. And we can see that what it's done is it's gone ahead. We didn't make a typo on the payment. We didn't make a typo on the payment date or the amount because that all got entered for us from the bank feed. So there's a benefit. Another benefit is the online banking match has already been matched and cleared away. It did that for us as well, so saved us that step. So there's the benefits. But in this case, you can see the HST is $2.17, but it should be 90 cents. There was no way for us to see and visually check that the HST is correct. So we're going to go ahead and just change that here easily enough to just 90 cents. You can see that the new QBO is not changing the total on us. That's great, just the pre-tax amount. So there is the drawback of using the bank feed to enter things and the benefits of using the bank feed to enter things. But as I said, I feel like the shift in the industry right now is actually to use those digital document management softwares like Dext, and then the entries get made from Dext, and we're just going ahead and matching and clearing the bank feed anyway. I'm going to continue to use the big screen way throughout this case study. And this is because, as I mentioned, the shift in the industry is to using digital documents and digital document management software, such as Dext or HubDoc, and there's others out there as well. And then once you've synced the source documents using the document management system, then you go to the bank feed and you either match or categorize or problem solve from there. And so we're doing that same sort of thing by entering these documents individually and then going to the bank feed. It really does parallel to also doing that same sort of thing using Dext or HubDoc or something like that. And I will show what it looks like using Dext or HubDoc in future videos. But for right now, let's go ahead and continue. We've changed this tax. We're going to go save and close. And now let's take a look at what the next item is in the list. Now we have a QBO subscription and we have all the information that we need. So let's go ahead and put this in. Now, I think it's interesting that I just gave this whole spiel over why we're using the big screen way and not the bank feed shortcut way. But I do have my own set of rules for subscriptions. So if you've got a reoccurring subscription, that's when I ask the client, can you give me an example of one at this amount? Then I create a bank feed rule for that amount, line it up, and a reoccurring subscription that's just going to be entered by this rule each time, and I only need to see the source document once. And I also attach that source document to the very first entry of that amount. Then if the subscription amount changes, that's when I ask again for another copy, and that way the business owner doesn't have to log in to get that same information every month, because monthly subscriptions is like, there's a lot of them, and that's a lot of work that we don't necessarily need to make people do. So let's go ahead and put in this QuickBooks subscription in that manner. Actually, look at that. I already did. I must have talked about this last month. See, rule office expenses, it's already lined up for us. I'm just going to hit categorize. Oh, sorry, it's a new feed for me. I've got to expand this and hit post. That is a toggle between categorizing and matching. So if I wanted to actually find a match, I would hit that toggle. But if I want to categorize, that is enter the shortcut way. So that's a toggle, not a post. Interesting. Okay, so that is the QuickBooks one in. What is next? So this one is actually called Personal MasterCard Payment. And of course, if we were uploading these documents to Dext or a management software, we wouldn't necessarily see what the PDF was called. You can, but it's not sort of in your face. You don't necessarily see it. But what we can see is that The MasterCard that was, or the MCard that was paid was card 7650, and we know that the triangle is 5525. So even if we didn't see that it said personal MasterCard payment, we've got our last four cheat sheet that shows us that this MCard is her personal MasterCard. So let's go ahead and let's put that one in. So if we were to put this in the big screen way, we'd say new expense. And who did we pay? We paid MCard. And the payment account was actually the Canada Bank checking. And the payment date was June 15th. Well, that's when this was printed. Let's make sure it is June 15th. June 15th. Oh, there it is, June 15th. I found it. So we'll just say June 15th, like this. And it's not interest, it is share owners. Sorry, I'm used to doing corps, aren't I? Owners, CC or bank. And we can say MCard payment to 7650, and that's 500. Out of scope, of course, and we can go save and close. We should have gone save and new. Let's see what's next in our folder. We have Cdn Tire. And here, we're looking at the details of this Cdn Tire invoice. You can see that it's her 2008 Honda Civic that got serviced. And in the first week of June, she purchased a work truck, and she told us, and she's keeping a vehicle log to say how much she's using that work truck for business, and it's going to work out to be 90% or more for business, mostly business, almost 100%. So any vehicle maintenance related to that work truck, the 2025 Fjord F180, we can claim 100% of that vehicle expense. This, though, is not her work vehicle. This is her personal vehicle. She says she did use it a little bit for business at the beginning, and that she kept a vehicle log, and she still is, but we don't have that vehicle log, and it is less than 50% business. And so I have discussed this already, that any vehicle expenses not related to the business vehicle that are related to her personal Honda Civic, playing with the words a bit, we cannot claim that as a business expense. We can only put that towards owner's draw. And I did create an owner's draw owner's vehicle expenses account, not on the profit and loss, but on the balance sheet, like a sub account of owner's draw, just in case at the end of the year, if we want to do some math or prorate those amounts, at least we have a list of the things that she gave me. So that's just a Naomi way of doing things. And we can see that the total is $279. It doesn't say how it was paid. So let's take a look and see if this $279.02 is in the bank feed. So we've got the triangle up, so let's look it up there, 279.02. And it is. She thought that she could claim this for business because business owners sometimes think that's what they can do. And I know I said that we don't usually do this, but I have it up anyway, so let's go ahead and say that this is out of scope. We cannot claim any HST on purchases that are not related to business expenses. So this is out of scope. It is Cdn Tire. It's not office expenses. Okay, let's just take a look. Why does it think the Cdn Tire is office expenses? Let's just see what it says. Based on the full bank description, this transaction is very likely to be with your supplier, Cdn Tire. Yes. You've used this category 1 out of 2 times for the Cdn Tire. So 50% of the time we've used office expenses at Cdn Tire. Interesting. Anyway, it's just, I kind of like to see why it suggests it before we just didn't know. So we're going to put this to owner's draw personal auto expenses like that. And I'm going to go ahead and post. Excellent. Let's see what is next in the charges folder. We have a Dollarama receipt, and we can see that there's a basket and a container. There's just a little bit of money. It's paid by cash, but notice she wrote it was paid by register cash. All right, let's put this in. We're going to go to new expense, and this is Dollarama, and it says register cash. So this will be important later. Remember, we have those register cap recaps. And so the payment date is 6/16, this. Reference, we can just say reg cash if we want. And the category, I'm just going to put this to supplies. Could be office supplies as well. I'm not quite sure what the baskets are for, but it's not a lot of money, so I'm not too worried. And interesting, it says it's $4.52, but it also notes that there's the rounded amount because we don't have pennies anymore in Canada. So we're just going to put this in at we're going to say inclusive of tax because I want to get all of that HST credit, every penny. We're going to say $4.50. That is HST. And then we're just going to change. Oh, see how it thinks that the HST is 52 cents. Excellent. All right, let's go save and new and see what the next one is in the folder. Next, we have a Shopify receipt and it is Shopify. So there must have been some promotion for her to not be charged Shopify for the first month because this is the first time we're seeing this Shopify charge. But what's interesting about it is that it is in USD. And even though it's in USD, HST is still being charged. A lot of times people assume that just because it's in USD, there's no HST being charged, and that is incorrect. You want to check to see if there's HST on that. Also, if it's a non-domestic supplier that is charging HST or GST, you're going to want to check to see if they are on the simplified regime. If they're on the simplified regime, you cannot actually claim the HST on that supply as a credit. You have to actually go to Shopify, or not Shopify, they're not simplified, but you have to go to that supplier who's on the simplified regime and request that they don't charge you HST because you're a registered Canadian business. Very often there is a place on their website in order for you to do that. So with Shopify, I can tell from this paperwork that they're not actually under the simplified regime because here is their GST HST number and it ends in RT0001. And if they were under the simplified regime, their GST HST number would end in RT9999. But most of the time, a lot of vendors don't actually show the RT tail on their GST HST number. So let me show you where you can check to see if the vendor is under the simplified regime. So you just go online and you type in simplified regime registry, like that. And you can just confirm a simplified GST account number. Come on down here and just put in the name Shopify. So Shopify isn't there. They are not in the simplified regime, but people who are, for example, Airbnb, see Airbnb, see how it ends in 99999 now? They are on the simplified regime. And so if you have if you are an Airbnb business and you're paying Airbnb like a subscription amount, they shouldn't be charging you HST, and there's two places on Airbnb to put your HST number. The first place is if you're collecting it, and the other place is so they don't charge you on your subscription. So it's kind of annoying and weird. I have more information about the simplified regime. I've linked to it in the description. But there is my quick answer for you. Maybe not quick. There is my, there's me trying to give my Coles notes on it at any rate. So we can go ahead and set up this rule now because we can enter this the big screen way, but we'd have to go to the bank feed anyway to see what the Canadian amount is. And if I pull this over, there's Shopify. We can see that the Canadian amount is actually $93.22. So let's go ahead and make this rule. By the way, let's take a look. Notice how AI thinks that this is purchases retail. Let's see why it thinks that. Based on the full bank description, it's very likely to be with your supplier Shopify. Okay, good. We haven't used this category with the supplier in the past. Like we haven't used any, so like that's why it doesn't know. But it's likely a good choice for this transaction. Suggestion is based on limited text in the bank description and categories your business generally might use. I don't know. I don't like that. Why? I feel like it's, if it doesn't know, it should say, I don't know, you haven't done this before. And honestly, if people have charges from Shopify, it's usually they'll put it to subscription expense or office supplies, you know, in other companies. Like, I don't understand why it wants you to put this to COGS. Anywho, we'll set up our rule anyway. So if we're going to set up a rule, it helps to line it up first. So we're going to back out HST from this. It is the 13% as per the paperwork here. And so this HST, it is Shopify. It's not purchases. I don't have subscriptions expense set up because I think that's too vague. For some of my clients who have a lot of digital tools, I do generally have digital tool subscriptions set up. If they use things that are like digital tools like Canva, for example, or like a lot of different ones like that. But most of the time, this is office supplies. So we'll just put this to office expenses. And now we've got those two things lined up. Instead of posting, let's expand and let us go ahead and create the rule. This is Shopify, money out, and we don't know what it is, but the description contains Shopify, HST, we're happy with all of that. Oh, look, the full bank, even though we didn't see it over here, well, we see it here, says what the USD amount is, but I don't want to replace every bank memo. I just want it to always use the one that's there, and I don't want to auto add. As I mentioned before, the only auto adds we do is the POS machine. Everything else I kind of want to see. So I'm going to go ahead and save. And it doesn't say yet that it's a rule. Let's refresh and see if it does. Yep, now it's happy. There's its rule. We're going to go ahead and post. So over here, post. Excellent. So now we have the Shopify in. What is the next one up? And this is a good one because you can see that there is diesel being purchased for $53. And the HST included in this 53 is this 610 right here. But also two other items were purchased. This is the pre-tax amount, and this is the HST on those products that were purchased. So the total HST on this receipt is actually $7.24, and it's just put in two different places. Now, some people might not know what STP is. It's a fuel additive, so that is going to be vehicle maintenance. And then Bounty, that's actually a chocolate bar. So there's a meals expense here. Now, it might be up for debate if this is a claimable meal or not, but for $1.79, we're not going to quibble. We're going to put it in with for meals and see what that looks like with the special meals HST that we have set up. So we're only going to be able to claim 50% of the HST on that Bounty. So this is going to just be a fun one to try and wrangle in. Let's go ahead and put it in together. So we go new, expense. This is Canadian Tire, and it was paid by the triangle, and it was paid June 16th. So June 16th. And let's put in the diesel expense. So DIESEL, auto diesel. And as I've mentioned before, I think we would just do auto fuel. The diesel and gas adds complication that isn't needed. I think I'll change that for the next time I do a case study. Now we can do inclusive of tax right now because of the 53 includes the HST. So we can see that 610 is backed out. Then what we can do is we can flip to exclusive of tax. So we didn't really have to do any of the math there. And now let's put in the auto maintenance of the FTP product, fuel additive. So there's auto repair and maintenance right there. And that is $6.99. And that's HST on top of that. And the last thing we're going to be putting in is the meals expense. Meals and entertainment, and that's $1.79. So if we were to just put the HST here, you would see that the $7.24, which is the $1.14 plus the $6.10, that is the HST that matches the receipt, even though the HST is split on the receipt. But because this is meals, we're actually going to use the meals HST, which only claims half of the HST on that Bounty chocolate bar. And now we can see that because we're splitting something that's an odd number, now the rounding is wrong. So all we need to do is just change one of those. Doesn't matter which one. I'm just going to change this to a 1 like this. And there we have our 62.92. So we're going to go save and new and see what's next. Next up, we have a McGroots Good for your roots, McGroots. I really enjoyed coming up with the paperwork. This is mulch and topsoil for garden design installations. And you can see that it was paid by MCard. And as I mentioned before, I bulk the delivery cost into the cost of the purchases and materials. That is a decision that I've made for the bookkeeping for Sarah. Of course, Sarah can come to me and say she wants to track that delivery expense outside. It's a good conversation to have with the business owner. But my reasoning is that delivery charge is part of the cost of acquiring the cost of goods sold, in this case, the materials. So let's go ahead and put that in. So the reason we're putting this in as an expense entry and not as a bill entry and a bill payment entry is because the bill date is the same date as the payment date. So there's no payment number that we need to track, so there's no check number, and also only one bill is being paid. So it's a bit redundant to have a bill and a bill payment. This goes in easier as an expense entry. Let's put in McGroots. So one thing that you'll notice is because we have that overpayment from that e-transfer, this is actually a credit that we could apply. It's letting us know that, hey, you have either open bills or open credits for this vendor. Are you sure you want to put in an expense? And I think that's because some people want to put in a bill and then they want to put an expense when they go to pay it. And so QuickBooks is just trying to help us out here. We are going to clean that up at the end of the month. If you remember, we were just going to wait and see if McGroots was going to like reduce the next invoice by the credit amount, but it's such a small amount, maybe they wrote it off, and it looks like they did. But we'll clean that up at the end of the month. So let's ignore that. And so it is June 19th. And the reference number is 8797. And that is purchases and materials, cost of goods sold. And the amount is $430. That's exclusive of tax with HST on that. Let's see, $485.90. Excellent. Save and new. What is next? Next, we have an easy edger quote. Let's see what this is. So this is not a bill. This is not an invoice. There's no charge. In fact, my note says this is a quote, not an invoice, bill, or purchase. So basically, Sarah is submitting to the bookkeeper a quote for something that may or may not be purchased in the future. Now, these are important to keep because they might be clues in the future, right? So in the future, if we see a purchase go through from Yardco Equipment Services, which spells out, yes, I really did enjoy making this paperwork. If we do see a transaction go through the bookkeeping bank or credit card for maybe $3,215 plus HST, whatever that would be, we can make an assumption in the meantime that this is an asset purchase. Like, it's our best guess based on the paperwork provided. But that's not quite enough. We would still need to have the actual bill from Yardco, especially if it's an asset purchase, especially if it's a larger amount, because if ever audited or reviewed by CRA, we would absolutely need the paperwork, and the bigger the amount, the bigger the risk. But we still want to, as bookkeepers, try to represent reality as close as possible. And so sometimes our best guess is sort of supported and fed by paperwork like this. But in this case, this is just a quote. We don't need to do anything with it. Let's take a look at what is next. Next, we have another Cdn Tire receipt. This is a great receipt. We can see we've got Rain-X being purchased. If you would look up this part number on CdnTire.ca, you'll see that they're actually wipers for a truck. And so we're going to assume that this is wipers for the new truck that was purchased, so it's vehicle expense. And what makes this a fun one for us to do today is that Cdn Tire money was redeemed. Okay, so what we want to do is we want to have 789 hit up the MasterCard general ledger so that we can match it in the feed, or make sure it gets reconciled correctly if we're not using a feed. And also we want to claim the full expense in HST. And so what we'll need to do is decide what to do with the Cdn Tire money redeemed. Let's go ahead and put this one in together. So this is Cdn Tire, Triangle MasterCard, 621, and we can delete this line and this line, auto repair maintenance, 5198 HST coming to 5874. So this is the full auto repair expense in HST that we want to claim. But this payment account right here means that 5874 is going to show up on my general ledger for Triangle MasterCard, and that doesn't match the 789. So we have to put it on a second line. So we're not tracking the Canadian Tire money earned on these receipts. And I think it would be an interesting conversation to have if this was a corporation, but because it's a sole proprietor, makes it a little easier. This is really just another type of cash that Sarah has and can probably use for personal and not personal, what have you. So what we're going to do is we're just going to put this towards, you could say, owners draw contributions. You can say owners CC or bank. You could say cash if you're going to zero out cash later, if you're not tracking it like petty cash or register cash. So those are just three options, just something that's going to be moved to the owner's equity at least at some point. So those are some of the options. I'm just going to say cash. And in the description, though, I am going to say Canadian Tire money redeemed like this. And then we can say minus 50.85. Of course, that's out of scope. And now we can see 789 is going to hit up that Triangle MasterCard general ledger, and our credit card is going to reconcile. We've claimed all of the expense and all of the HST. So we're going to go save and new and take a look at what is next. Next, we have a BOS, or a bill of sale. And this is a private purchase. Sarah is purchasing from James Rogers a utility trailer, and she's paying it with a check, and she's paying $1,000. So if this was a corporation, it would matter that it's Sarah's personal name because, again, Sarah is not the corporation. But again, she is a sole proprietor. Sarah is the business. So it was good for her to have her name on here because she needs to get plates for this, right? And we're in Ontario, so she'll need to go to MTO and get plates. But in the meantime, we can put this purchase in. We can see that there's a check. It's for $1,000. And what makes this extra interesting is that a trailer, as per CRA, for tax purposes, is considered a Class 10 asset. And what do I mean by Class 10? CRA has dictated how much, I'm going to say depreciation can be claimed for tax purposes. It's not quite the right wording. It's called capital cost allowance. CRA recognizes that capital assets, or things that you buy, are going to lose value over time, and they've set a rate at how much you can claim of that expense over each year. But it depends on what category or what class that asset is in. Obviously, a computer is going to depreciate quicker than, say, like a machine, like a machine that makes things, right? And also, vehicles have a different rate of capital cost allowance, or the amount that we're allowed to claim for the associated loss in value over time. So from CRA's perspective, a trailer's got wheels, it goes on the road, right? It's got like a license plate. I don't know why they put in this class, I'm just guessing. But they've put that into Class 10, the same that we put trucks and cars and things into. But from a GAAP perspective, from a generally accepted accounting principles perspective, we don't match what tax rules are. We want to be as close to reality as possible, right? So from a GAAP perspective, this is not actually considered sort of a vehicle asset. It's going to be considered an equipment asset. And also because we're trying to match reality as close as possible, GAAP doesn't necessarily depreciate the assets in the same way that the tax rules do, right? Like there's different ways of doing it, straight line depreciation, so on and so forth. That's a topic for a different day. The point today is that a trailer, according to CRA's capital cost allowance, is Class 10, which is the same as vehicles. And from a GAAP perspective, it's equipment, which goes in a different sort of bucket on your balance sheet. So where do you put it on the balance sheet? Well, Most people put it with the equipment because the tax analysis at the end of the day, at the end of the year, is done by the tax preparer, who will go through those asset purchases and put it on a different form when they file the taxes. I like to make it a little extra helpful by creating a sub-account under equipment that is specific for trailer assets. That way the accountant or the tax preparer can see at a glance, there is an asset in the equipment GL account that is actually class 10 that when I prepare the taxes is going to be with sort of the auto equipment list. So that's how I deal with this, and let's go ahead and put that in together. So before we enter this, let's go over to transactions, chart of accounts. And if I were to type in equipment, you can see, let's expand this out, give us a bit more room, that we already have a property, plant, and equipment. And what I want to do is I want to make two sub-accounts. So I'm going to make a sub-account that is general equipment assets and a sub-account that is trailer equipment assets. So let's go ahead. I'm going to go new account and general equipment assets. I like the word assets to be in the name of the GL account so that it doesn't accidentally get used as an expense, even though it's already under a GL account that has the word assets, but that is me just being extra cautious for future users. And this is a property, plant, and equipment I call fixed asset. And let's just say machinery and equipment. And we can go that this is a sub-account of equipment assets like that. We'll go save and new, and now we'll go trailer equipment assets like this. And again, it is a, property, plant, and equipment, or a fixed asset machinery. And we're going to make this also a sub-account of equipment assets. And then we're going to go save and just save. Let's see, save and close. Excellent. So now you can see what's happening is we've got equipment assets with two sub-accounts. And let's just make sure that if there's anything in equipment assets, we want to move that down to general equipment. So let's take a quick look. And I can see that nothing yet is in the generic equipment assets account. Now, another thing that I like to do when there are when there's a parent account and there's child accounts is I like to sort of make a note somehow that this is a parent account. So let's go ahead and edit so that it doesn't get used, or a reminder if it goes to get used. So I used to do this little squiggle line right here, and then to sort of communicate to the bookkeeper that the accounts, that this is a parent account, don't use it, try to use the sub-accounts. But I did have an accountant come back to me and say that that character doesn't work with their macro in Excel. So I've decided to use the plus sign. So the plus is just basically sort of trying to let the bookkeeper know this is a parent account and there's things underneath that are better to be used. So we're going to go save here. We're just saving the name of it. And you can see it's reminding you expand this out. There are some sub-accounts below. Excellent. So let's go back to that expense screen, new expense. And who did we pay? We paid James Rogers. We didn't pay out of the triangle, we paid out of the Canada Bank checking. And that was June 21st. And it was check number 22, right? So check number 22. And now if we were to do equipment right here, you can see equipment assets has a plus. And that plus is to remind us that there are sub-accounts to choose from, so we can say trailer assets right there. And whenever you're increasing an asset GL account, you absolutely need to put in the description. So we're going to say it's a 2022 PJ utility float trailer VIN, and I just do the last four, 1, 2, 3, 4, and just you can type out the whole VIN if you want, and the amount is $1,000. That's out of scope right now, and we'll talk more in a minute about this, but we didn't give any HST to James Rogers. He's just a neighbor. There's no HST noted here. And also another thing I like to do is to add the attachment whenever an asset is purchased. So let's go to week 3 with notes, charges, and here is that bill of sale open. So I like to put the asset purchase paperwork right in it, even though we have the description. So the description is going to show up when we look at the general ledger detail listing. And if we ever, and it's good to have the actual source documentation right in there. So we're going to go save and new and take a look at what is next. Next, we have MTO, interestingly enough. So here in Ontario, if you buy a vehicle privately, you still have to pay the sales tax, okay? And you do this when you go to the MTO to register the purchase of that vehicle or trailer, as you can see. What is very, very interesting and unknown to people about this is that the sales tax that we're paying at MTO is not GST, it is not HST. It is RST, retail sales tax. And RST goes to the province. This is going to go to Ontario. CRA, the federal government, is not going to see any of this sales tax in their coffers. And because of that, the business cannot claim the retail sales tax on this purchase as a GST HST input tax credit. We cannot claim this sales tax. This is not GST, this is not HST, this is not claimable. And this is something that a lot of people aren't aware of. Now, this is just a smaller amount. This is just a little trailer for $1,000, so it's only 130. But I have seen this happen with private sales on larger vehicles. So something that maybe is a few $1,000s in an input tax credit, that was disallowed by CRA. Now, part of the reason that people think this might be HST is because it's 13%. And the provincial portion of the sales tax is only like 7% in Ontario. So the fact that it's 13% is a real red herring for people. They think, oh, that's HST. The reason it's 13% and not 7% is because when tax got harmonized, you have all of these car dealerships lobbying the government saying, hold on, that's a lot of money for consumers that aren't businesses. We're going to see a shift to private sales if you don't keep the sales tax charged to MTO at the same 13% that the dealerships have to charge on purchase of new vehicles. So the lobbyists kept it at 13%. But we cannot claim this as a GST HST input tax credit. Now, this is just a little trailer, so it's not a big vehicle. It's only 130. But if it's a bigger vehicle, we might be worried that that's a lot of money lost. But I have great news. The Ministry of Ontario also listened to the business owners who are saying, hold on, doesn't seem fair either. We should be able to get this back as a credit. And so what MTO has, or the Ministry of Ontario has, is you have a refund of that sales tax from the provincial government. So if you are a business in Ontario that has purchased a business vehicle asset privately and have had to pay RST at MTO at the transfer of the ownership, and it's a lot of money, you can actually go to the Ministry of Ontario with this application and apply for the sales tax refund directly from the Ministry of Ontario. So, isn't that interesting? It's interesting to me, mainly because I've seen it come up in CRA audits in the past. So what does that mean for you and me, who are bookkeepers, who are just trying to put in a piece of paperwork for the business? $130, you can see it was paid by debit, it was paid by the business bank account. How do we put this in? Well, it is not claimable GST HST from CRA, so we can't put it towards the GST HST GL account. What we'll do is we will treat it the same way that we treat the RST or PST that is not a claimable credit from the government. We increase the cost of the thing that was purchased. So in this case, what was purchased was a trailer equipment asset. So this $130 is part of the cost of that asset purchase. It's how much the asset cost the business. So we're going to put it towards that GL account. What we're also going to do is we're going to let Sarah know. We're going to let her know that we could not claim this 130 as a GST HST credit, and that if she wants to get that back as a credit from the Ministry of Ontario, we send her this link. And depending on the services that you provide, you might be able to help her with that. So let's go ahead and put in this debit receipt just as described. So this is MTO. We paid MTO, we paid by debit on the 21st. Say debit is the number if you want. And so the category is, as I mentioned, the trailer asset. We're going to put the RST towards whatever the thing is that the RST is being charged to. So it was part of the purchase of this trailer. And we're actually going to say RST at MTO on PJ on 2022 PJ float trailer private purchase like this. And that's 130, and there is no HST on the sales tax like this. And you can also attach this as well if you wanted, and we're going to go save and new. Okay, let's take a look at what is next. Next, we have a chiropractor receipt. Let's take a look. So here we have a chiropractic receipt. We can see that it was paid by the business credit card and that it was for Sarah for lower back pain. Now, if she's been doing a lot of kneeling for her garden installations, she might say my back pain is business related and therefore I can claim my chiropractic expense as a business expense. But this is not true. A lot of business owners do tend to think that way, and I mean, I can absolutely appreciate why they would. But medical services, I have it as a note right here, medical services are considered personal. If a business wants the business to cover medical costs, they should look into private health service plans, or PHSP. So I don't know a lot about PHSPs. I just know that it's something that the business owner needs to look into if they want to claim medical expenses as business expenses. In the meantime, as a bookkeeper, because there is no PHSP, because Sarah paid it with the business credit card, I am going to communicate to her that we can't claim this as a business expense and to speak to her tax preparer or accountant about what the PHSP is. If we don't communicate these things to the business owners, they'll never know. Now, if we're not sure, we can also ask the tax preparer specific to that client, and we can say, hey, this was, Sarah gave this into us. I don't think we can claim this for business. Can we talk to Sarah about this a bit more? So a lot of people think that asking questions sort of shows that they don't know what's going on, and that's not true, actually. Asking questions shows you know what your limits are, that show, like, we're bookkeepers, right? We're not tax preparers, right? We only know what we've come across, and we can't learn everything all at once. So communication is key, and don't be afraid to ask questions. Anywho, let's go ahead and put this in together. So this is stand corrected Chiro. It was paid out of the triangle. It was paid June 21st. And we can put in 1258 if we wanted to. And this is owner's draw contributions. And the amount was $60. Like this, out of scope. Save and new. Let's see what's next. Okay, we have one more. It is a Metro receipt. So actually, that Metro receipt, that's June 22nd. You won't see it in your week number 3 folder, but you will see it in your week number 4 folder. And so we will look at it in next week's video. Let's go now to the bills.